contingent liabilities. I'm in Chapter 1, CA Foundation, Chapter 1, Unit 5, Contingent Assets and Contingent Liability. It's a very small chapter, so we'll complete it today itself. What is a contingent asset and what is a contingent liability? Contingent basically means, a word contingent means the obligation arises only and if only on the happening of a certain event or set of events. Contingent. Contingent means happening or likely to happen on the happening of a certain event or a set of events. Obligation becomes valid. So if the event doesn't happen, then the asset or liability does not even exist. The asset or liability or the transaction itself will happen, like transaction itself will happen only on the happening of the event or events. So, for example, what is a contingent asset? There is a legal claim. There's a legal claim on a particular property or asset, right? And the claim can be in favor or against the company. The claim, when I say claim, can be settled, can be settled in favor or against the company. So, if the claim is settled in the favor of the company, then it gives a title to the company, right? So the asset can be created only if the claim is settled in the favor. If the claim is against the company, then we have raised a claim and that falls out, then asset cannot be claimed, right? Asset is not created. Similarly, contingent liability. Contingent liability. Liability that gets created only on the occurrence of a particular event. Example, again a legal case. Let's take like the income tax department has filed a claim on the company. So the company is very confident that this claim is not tenable in the eyes of law and they don't have to pay. So the company is going for a legal remedy. If the case is settled in favor of the company, then this liability does not arise. So now the question comes in: should we account for this asset? Should we account for contingent liability or asset? Should we account? And accounting can happen only when there is a proper documentation, or only when the liability or asset is settled, only when the receipts or expenses can be ascertained clearly, and only when there is a proof, independent document for accounting. When all these parameters are not satisfied, we cannot do an accounting. So in this case, the claim can be or cannot be basis the happening of the event or events. So we cannot account for a contingent liability or asset. However, this should be part of notes of accounts by submitted when submitted to the authorities or to the board, right? Why? Because if the this is a disclosure. I am using the right word. This is an accounting disclosure. This is an accounting disclosure. So the account should be very clearly mentioned, just in case the legal pursuit what the company is making against a particular claim. If the case gets settled against the company, then this amount has to be paid, right? So that is why it should be part of the accounting disclosure. Now let's find out what is the difference between a liability and a contingent liability. While liability is certain, right? Contingent liability is certain. Contingent liability is uncertain, right? Liability is finalized, right? Liability results in outflow of cash or cash equivalent, right? Contingent liability is possible only on the happening of event or events, right? So there is no outflow of cash. There is no immediate or certain outflow of cash, right? And liability is shown in the accounting statements, balance sheet, like balance sheet. Contingent liability is shown in the notes to accounts, not in the balance sheet, not in the financial statements, as a notes to account. Similarly, a contingent asset is also shown as a notes to account, right? Now, another distinction, another interesting difference also we have to see. What is the difference between a provision and a contingent liability? Provision is also not certain, right? So why we are showing provision in the financial books? Why we are not showing contingent liability? The major difference is provision is a certain liability, but the amount is not known or certain. Amount is not certain. Like we are creating a provision for, let's say, doubtful debts, right? Provision for doubtful debts. Let's create a provision for outstanding wages, right? So let's create a provision for any other liability, right? So sundry creditors, right? So the supplier has given an invoice, and the company is negotiating for the additional discount. So while the supplier has to be paid, whether the amount to be paid is with discount or without discount. So, and the invoice is still not processed. So a provision has to be made in the books. How do we make? How do we account for the liability in the current year? We will create a provision where we know that liability is certain, but we are not sure of the amount. Whereas in case of contingent liability, it's not only the amount certain, it is, in case of contingent liability, not even the liability is certain. Not even the liability is certain, right? That's the difference between a provision and a contingent liability and a liability, right? So provision meets the recognition criteria, right? Provision meets the recognition criteria, whereas contingent liability does not meet the recognition criteria, right? So, and provision is a present obligation to be paid at a certain date once the amount is ascertained. Whereas contingent liability is a future obligation, right? Hope the students are clear, right? The common example is again a case filed by the authorities where the company has gone for an appeal. Like that's a very common example of a contingent liability. So and similarly, again the revenue, or again the revenue can come in only when the case is in favor of the company. So that's again an example of a contingent asset, right? Let's test the knowledge here. Let's test the knowledge here. It's very contingent asset usually arises from an unplanned or unexpected events that give rise to the possibility of an inflow of economic benefits to the entity. Right. Correct? Contingent asset is possibility of an economic benefit to the company on the happening of an event of an event or events. Right? Right. Next one. In an inflow of economic benefit, if an inflow of economic benefits is probable, then a contingent asset is disclosed in the financial statements. Right. See, if the inflow of economic benefit is probable, then a contingent asset is disclosed in the financial statement, or B, in the report of approving authority board of directors in the case of a company and the corresponding approving authority in the case of any other enterprise in the cash flow statement. So it is disclosed. Answer B. Answer B, which is in the report of the approving authority, right? In the report of an approving authority. Hope the students are clear on this, right? Next one, in the case of dash, either outflow of resources to settle the obligation is not probable, or the amount expected to be paid to settle the liability cannot be measured with sufficient reliability. It's contingent liability. In the case of contingent liabilities, either outflow of resources to settle the obligation is not probable. Yes, right? It is not probable. It is still contingent, or the amount expected to be paid to settle the liability cannot be measured with sufficient reliability is contingent liabilities. Next, present liability of uncertain amount, which can be measured reliably by using a substantial degree of estimation, is termed as provision. Present liability of uncertain amount. Amount is not certain, but the liability is present, right? It's called provision. In the financial statements, contingent liability is recognized or not recognized or adjusted. It is not recognized. In the financial statements, contingent liability is not recognized. It is given as the notes to accounts, right? So, hope the students are clear on these topics, right? Just in case, you can go through. This is a very small chapter, and just in case the students have got any clarifications or queries, obviously they can send an email to me at babupriya@rediffmail.com. I have given here my email ID, or you can obviously send an email comments to the video and I'll get back to you immediately. Thank you, friends. And this is a very small chapter. It's basically an understanding of how the concept works, right? Be thorough with the concept, then the solving of problems and questions or solutions will be more easier, right? Please understand the concept. That is the most important thing. Whether you're pursuing a CA foundation or a CMA foundation, understanding the concept, or even if you're in school final students uh, or graduates, understanding the concept is more important. So contingent liability and assets is a basic concept. Please understand this and come back to me for any queries or clarifications. Thanks, students, and have a great day.